This is the July luxury real estate market update for Las Vegas, Nevada. Hi, I'm Rob, the broker owner of the Rob Jensen Company. So the real estate market is starting to stabilize. So what does that mean? Well, let's talk about interest rates first, okay? Warren Buffett had a really good quote to help put this in perspective. And he said, interest rates are to asset prices like gravity is to the apple. They power everything in the economic universe. Warren Buffett also said if he was on the moon, he could probably slam dunk a basketball as well. And so basically what you've got is, really low mortgage interest rates. It makes it easier for house prices to go higher. If you're talking about low federal funds rates, the stock market goes high. As the federal funds rate goes up, the stock market, the gravity gets heavier and the stock market starts to come down. Talking about mortgage interest rates, once again, as the mortgage interest rates climb, it starts to pull housing prices back down. So, there was at one point where you could get a 30-year mortgage somewhere around 2.7, 2.8%. And rates getting that low was really just this fuel that helped push this tremendous market we saw. I mean, basically from July of 2020 all the way through the end of 2021, this market was just unprecedented, like nothing seen before. I mean, it burned white hot. But now, over just the last few months, in April, we saw interest rates hit about 4%, in May about 5%, somewhere around 5%, and then in June, we've been around 6% now. So, this climb in interest rates has been real, and it's also slowed down the market. I mean, buyers effectively have less buying power, as rates climb, which means this lowers the amount of demand of, willing and able buyers out there. So that's definitely one of the big contributors to this slowdown. Now, you also don't have all the stimulus money that was printed over the last couple years. I mean, as of now, the government's basically stopped printing money, while they try and get this inflation under control. And that's going to take a while. I mean, there's the word out there is that we're probably kind of headed into this stagflation period, which is sort of the worst of both worlds. We're still going to be having this inflation that who knows how long it's going to go on for. So there's still going to be climbing prices, just in general goods and services. But yet the economy is obviously starting to shrink and pull back a bit. You see it in the stock market. But higher interest rates, less spending, you're just going to have sort of this crunch on the economy, but higher rates, and that's where the stagflation concept comes from. And that's going to be one of those things where, look, the sooner the government can get back to printing money, they're going to gladly do it because our debt service has just gotten so big that this government probably pretty much has to print money to stay afloat. So this month, when we look at the guard-gated single-family home sales, I also want to compare it to 2019. And the reason why is 2019 was a fantastic market, and it was sort of the last normal year before COVID rolled in 2020. Starting with everything being closed in the beginning to the stimulus, etc., for the rest of 2020. So let's look at 2019 to see what a return to normal might look like. For the month of June, there were 73 closed sales this year. And that's down a little bit from the previous month where there were 96 sales. And if you compare that to June of 2019, there were 70. So 73 this June, 70 in June of 2019. Pretty similar. There were 81 pending sales at the end of June, which is down from 115 the previous month and 97 in June of 2019. This lower number of homes that are currently under contract is going to ultimately lead to a lower number of closed sales next month. When a home is pending, that means it's in escrow or under contract, and that escrow period is generally 30 to 45 days where a buyer does their home inspections, gets an appraisal, etc. So there's always this lag time between when a home goes into contract and when it actually closes. So now if we take a look at inventory levels for guard-gated single-family homes, there were 406 homes for sale at the end of June, which is a significant increase over 314 the previous month. However, it's still short of the 553 that were available at the end of June of 2019. So the trend we're seeing here is a decline in sales volume and an increase in the available homes for sale. So when you look at this as simple economics, what we've got here is an increase in supply and a decrease in demand, and that's going to soften up the market. It's going to lead to generally more days on market for homes that are for sale, and in some cases, homes perhaps needing to lower their price to be more competitive. So to take that comparison of supply and demand one step further, let's take a look at absorption rate. So for example, from 500,000 to 749,000, we've got a reading of 3.0, which basically means there's approximately a 3-month supply of inventory in that price point. That is still predominantly a seller's market, okay? Basically, 6 months of supply is generally a balanced market where you're going to see prices remain relatively stable. As things trend below 6 months, it becomes more of a seller's market. Once again, you've got higher demand, less supply. As things go over 6 months, it starts to become more of a buyer's market because you have more supply, less demand. So you'll see here on the absorption rate chart that for the most part, as the price goes up, the absorption rate or the months of supply is also increasing, okay? Something else to just be aware of though, is you can see that you've got different markets in these different price points. So, basically at 1.5 and below, you're still a little more of a seller's market because you're below 6 months of inventory. Right around 2 to 3 million, you're hovering right around that 6-month mark. So that's a little more of an even keel market. If you want to jump in at 3 million and plus, now we're getting almost into double digits where that's going to shift to more of a buyer's market. So as you can see, there's no one answer for the question, how's the market? Ultimately, it's going to depend on where is your property, has it been renovated, and the price. Now that we're trending back to a normal market, it's more important than ever to hire a team of professionals with experience negotiating, marketing, and selling luxury properties. If you'd like our help buying or selling, please give us a call at 702-442-1150.